Difference between price action and indicator systems in trading. There are two primary approaches: price action and indicator systems. Let's explore the distinctions between these two methods. Indicator systems. Traders employing indicator-based systems tend to focus solely on indicators displayed on the chart. These indicators, however, have a lagging nature, meaning they react to past market data. Differences between price action traders and indicator traders. The fundamental contrast lies in the approach to analyzing the market. Price action traders rely on the actual price movements on the chart, observing patterns and trends directly. On the other hand, indicator traders heavily depend on technical indicators, which may lag behind market changes. Aim of indicators in trading. The aim of using indicators is to provide traders with additional insights into market conditions. However, it's essential to note that indicators don't account for price action movements. They operate based on mathematical calculations. Indicator system usage. Traders who employ indicator systems typically disregard or do not consider price action. Their primary focus is on interpreting signals generated by technical indicators. These traders don't actively analyze the raw price movements on the chart. In summary, while price action traders engage directly with market movements, indicator traders rely on mathematical indicators that may not fully capture real-time market dynamics. Each approach has its merits, and traders often choose based on their preferred analytical style. Thank you for today, and for more insights, follow BTC Capitals.